What do we do with fast-growing tech companies that are putting up fantastic numbers in an environment where the Fed looks ready to ramp up its war against inflation? And that sometimes been very bad for these stocks. Take CrowdStrike, the cloud-native cybersecurity firm that I've liked since it came public. Here's one that racked up huge gains for the peak in late 2021 and then plunged along with the rest of its cohort. By the time it bottomed this January, it had lost 69% of its value. Not so nice. Since then, the stock's made a ferocious comeback from 92 to just under 129 in roughly 2 months. And last night, CrowdStrike reported a magnificent quarter, beating expectations comfortably on every key line. Management also issuing very strong guidance for both the current quarter and the full year. Management sounds incredibly confident about the future. The guys have a pretty tremendous track record. CrowdStrike's reported 15 times since coming public. It's never once missed the sales or earnings estimates. Wow. But it is a tricky environment for fast-growing cybersecurity outfits. So what is it at this time when the Fed's talking tough? What does it mean? And is it going to hurt their future? Let's check in with George Kurtz. He's the co-founder and CEO of CrowdStrike. Get a better read on the situation. Mr. Kurtz, welcome back to Mad Money.
Great to be here with you, Jim.
So, George, you acknowledge to some degree that there's some problems, elongated cycles. You use the words. But frankly, I can't detect any slowdown whatsoever in your business. If anything, there's an acceleration toward a more complete offering that you have.
Well, I think when you look at the macro environment, obviously there's been elongated sales cycles, but we really try to get in front of them this quarter and really focused on selling the value to customers. And, you know, when you think about customers and security, it's really hard to put critical security spend on pause and pause it indefinitely. So, you know, we saw a great Q4. We saw a great January. And I think, you know, organizations are really understanding that security is critical to saving money, keeping their costs down, and obviously keeping them safe.
Well, you make a point, say, for instance, Microsoft, which a lot of companies just use by default. Several times you call it a low-cost, good enough promise in an environment where good enough just isn't good enough, is it?
Well, it isn't. You have to realize that the Microsoft technology is still signature-based. Just yesterday, they had 6 signature updates. There's a reason why CrowdStrike was started, because it has a much different model. It's an AI-driven model. We don't have to update our technology every day to keep up with the threats. It can actually predict whether something is good or bad. And that means a lot in keeping customers safe. And when we think about Microsoft itself, we have many customers that maybe have Microsoft technology, but they still layer CrowdStrike on top of existing Defender technology to provide an additional level of security. And that's what's important, keeping customers safe and stopping the breaches, which is why I started the company.
The only thing that I saw that related to the Fed at all in this call, to be honest, is that your CFO said you took opportunities you saw in the labor market. People are laying off good people for you, right?
Well, what we talked about is we did some tremendous hiring last year, so we're going to significantly moderate the pace of hiring this year in 23. But what he was referring to is there is a tremendous labor pool that's out there, and we want to make sure that we get the best candidates for CrowdStrike, and we're still investing in our business. When you look at our sales efficiency number, 1.1 on a magic number basis, this incredibly efficient business, and we're not gonna let up in making sure that we can capture this tremendous market in front of us. And what does that mean? It means tremendous free cash flow generation, a record free cash flow of over $209 million at 33% operating cash flow margin. So we're going to invest strategically where we need to, but we're going to be very balanced on adding headcount.
Are you worried that the institutions on Wall Street aren't willing to look at non-GAAP numbers anymore and insisting on GAAP profitability? Or do you think that they see through that and understand that free cash flow is really the best way to look at your company?
I think free cash flow is the best proxy. You have to look at a couple of different things. We've only been public 3 years, number one, right? And you have to look at our business. We're not a box company, right? We're not a perpetual license company. It's all ratable revenue, which is the most valuable kind of revenue, and that takes time to ramp. And when you actually look at our non-GAAP numbers, right, we take out stock-based compensation, it really, that's what it's a function of. And as an emerging company, we continue to make sure we attract and retain the best people, and that will moderate over time. So free cash flow, I think, is the best proxy to how healthy our business is. And at 33%, we're in rarefied air.
All right, so I keep seeing these same companies, and I know that propelling the growth. You talk about multiple point products, Symantec's in there, Trellix is in there, Trend Micro's in there. I mean, why are these companies Why does anyone use these companies?
Well, it's a huge market, and this is the great part about our opportunity. We're number one in market share at 17.7%, according to IDC. So great, we're number one. It's still a fraction of the overall market, and over time, security has really become a fragmented market. Because we're taking a platform approach, really the Salesforce of security, as I always say, this gives us the ability over time to consolidate that spend, which is what we're doing with customers. We're consolidating their agents, consolidating spend, and reducing complexity, and giving them a better outcome, which is stopping breaches.
Some people criticize me for buying Palo Alto for my charitable trust, and knowing that I like CrowdStrike. To me, the issue is not Palo Alto versus CrowdStrike, from what I can tell. It's this huge incumbent group that has to go because they're costing a fortune not doing the job. And so much business in the cloud that there's room for everybody.
Well, it's a big market. And what's important to realize in security, Jim, is that security technologies parallel the slope of the technology curve. Meaning, as technology gets more sophisticated, you need security products that are very specialized to protect against those new technology innovations. We protect a certain subset of the market: endpoint security, data, cloud security. Palo Alto obviously has a huge firewall business and some other cloud offerings, and there are many other security companies out there. The point is, we need to provide the best platform for customers to make the right choice, to put the pieces together and focus on the best-of-breed platforms that are out there, and we're certainly one of them.
Finally, I thought it was interesting that you teamed up with Dell. I mean, especially Dell's buying VMware, which is which at the same time, as we know, is also Carbon Black, which you mentioned is beating at one point in your conference. You beat Carbon Black. But this Dell could be a significant one because they're into a lot of different shops.
Well, yes, we had a relationship early on with Dell, and then because of the VMware Carbon Black relationship, that was put on pause. But now that relationship has changed, we're excited to be back with Dell. They've seen the demand from their customers in securing endpoints and managed services and their device as a service offering. So there's many routes to market, including being shipped on the Dell boxes for business customers, and even having Dell reps get compensated on selling CrowdStrike Falcon subscription. So it's early days for us. We're incredibly excited about partnering with them, and I think it could be a meaningful part of our business in the future years.
Yeah, I know you would not have mentioned that because you're not for dross and you're not for show. It's going to be a meaningful deal. I want to thank you, as always, George Kurtz, co-founder, president and CEO of CrowdStrike, who delivered still one more great quarter. Great to have you on the show, sir.
Great. Thank you so much, Jim.
May have money's back in for
Coming up, where is she now? The former CEO of IBM joins Cramer with the latest on her fulfilling second act. Next.